What's up, you guys? Welcome to this week's podcast, this day's podcast, Thinking with Mike. And today we're going to talk with Ken.rife of Fairway Mortgage. And we're going to get into what it's like to be a loan officer in the world of 90% less mortgage applications. So what's up with that?
Well, hey, you covered it yesterday, man. I mean, it is down, but like in the grand scheme of things, like you're looking at mortgage applications as a whole, right? And it's down, but it's kind of funny that, you know, we're down specifically because there's no refinances going on. And
Why
last
not?
year it was a ton of refinances going on. So it's just like what we talk about all the time is just this hype and this like a big talking point, a big news article. You know what I mean? Like, and the news cycle is always so far behind. Like, you know what happened overnight that no one's talking about?
Well, I think people are talking about it.
I don't know. Maybe they are. Maybe they aren't.
We're talking about the CPI.
I mean, I just opened up a major news outlet, and like one of the first story headlines, which is amazing to me, is mortgage rates back above 7%. You know what I mean? And like, first off, it's been there
for
a
long
while.
time. Yep.
You know. Second off, we just had one of the best overnight and opening to the markets that we've had in like, maybe 3-4 months.
Yeah, big time. Great news too. And the Fed
And no one's talking about it.
Well, and the Fed even responded positively to it, right? Well, what's that interest rate? They said they might be capping off at 4.5, and everybody last week was speculating that they were going to cap it, 5.5, maybe even touch 6. And
Right.
Jerome Powell came out in relation to the CPI, and he said that we may be, pausing at 4.5. That's really bullish news.
Mm-hmm. Yeah, I mean, I think that's the other thing too, and the thing that we talk about, you and I, which is it's kind of been a bad year for most all markets, right?
Yep.
But we've learned a lot of lessons. One of those lessons is I am kind of done using those outlets to make decisions about my own personal financial future.
It doesn't really make any sense. And we talked a little bit about it yesterday. Like, you may have the opportunity to pick like something that's less bad, right? And so when we're talking about home ownership, we still have accelerating rents. We're talking about maybe a plateau in rents within the next year or so. People are starting to predict that they're probably going to plateau and cap. But when you're talking about home ownership, when we have 7% interest rates versus renting, like that's a pretty easy like pros and cons. Like what's less bad about that?
Yeah. So I think you, myself, everyone in the office, we kind of took a minute to take 2 steps back and really evaluate this market for what it really is. No BS, no bullshit, right? Is this actually a good time to buy? Because I think no matter what, you could have major flooding, and you can still have companies that are out there going, well, we need more water. Yep. We need more water. This is a good thing. This is why, so it's like, what I really wanted to make sure is like, hey, I don't want to go out there and tell people it's still a good time to buy when it's a complete load of crap for that to be happening. And the more we dove into that, and the more we dove into the rental pieces and the cash flowing on investment and the temporary nature of the market that we're in, and the leverage shift from seller to buyer, right? We're like, oh my gosh, yeah, like actually, tangibly, good time to buy. And we're seeing in one day.
Could be is the answer.
Could be, yeah. You can still walk into a wall of sharp, rusty nails for sure.
Yep.
You're not doing it the right way.
Yep.
Matter of fact, I think if you're a FSBO client right now on the market,
That's for sale by owner.
Sorry.
Yep.
I mean, I've seen a couple of those out there, and you're just like, whew.
Yeah,
good luck, man.
Yeah, they're getting smoked, right? And they've always gotten smoked.
Yeah.
It's just it's whether or not they know about it.
And I think we can both agree that if you were for sale by owning in the last like a year ago today, you honestly probably like did okay. Well, it wasn't great, but you did worse than most, but you still did okay.
Like we talked about this yesterday, it's the illusion of success, right? It's when you sell your home with multiple offers, and you blow the confetti, and it's like, heck yeah, like we killed it. But they're not thinking about the extra money that they left on the table. Like, what about you could have had, you had 2 or 3 offers. What if you had 5, 10, 12 offers? Like, then what's your money look like? So when I say that, like, they didn't know about it, I mean, like, they thought they were super successful.
Yeah.
And they may have been successful at a level, but not as successful as they could have been. Now they actually super know about it because for FSBOs are just sitting on the market, not doing anything, overpriced, getting wrecked.
Mm-hmm. And I think, and I mean, this all comes back down to the key point too of like every market's going to have the pros, every market's going to have the cons. There's going to be some markets where the balance is shifted very clearly in one direction and others in the other direction. But there's always an opportunity, but it isn't always the same opportunity. So like I would say right now, the opportunity is not, you're not going to maximize on that home's value right now. Right, not right this second. Mm-hmm. Okay.
Yep.
If you're selling a home right now, generally speaking, you need to make a move.
Yep.
You know,
you have an empty house. A lot of empty houses. A lot of investors that are just like, you know what, maybe I don't want to rent this again. Let's sell it.
Yep.
Relocations very prevalent.
Yep.
Downsizers very prevalent. So the people who are putting their house in the market are generally doing that out of
there's a motivation more so than just, I can make a lot of money on this home right now.
Correct.
And you still can.
Yep.
That's what's crazy, right? Is like, you know, I mean, I'm not going to be able to sell for $75,000 over lists. Like that's never been a thing
right
up until the last 2 years. It's kind of like we've created this idea in our head that like the last 2 year market is the way every market should be. Right. That is a illusion.
Yeah. So what we're finding a lot is that most consumers that are caring about the housing market probably own a house, and a lot of them have really good interest rates. Okay. And so we get this idea that we're everybody. And so we think that our motivations, like, so the move up buyer or the one who's in a pretty good house that matches what they're looking for right now, and they've got a 3%, 2.5% interest rate, like, it's not a good time for you to move, right? It's just not like be cool and move later, right? But that's not all inclusive, right? There's plenty of buyers and sellers out there in the marketplace that it is the right time for them to move because there's different motivations and different rationale and reasons for that. So you can't tell people not to BS people who are saying like it's still okay.
Yeah.
When you're specifically encouraging people that gotta move or gotta sell a house, like, don't worry, we got you.
Isn't it kind of funny how like in a market like this, everything gets overanalyzed?
It's unreal.
I was thinking about that the other day. I'm like, man, I've been doing this for like a decade, and moving is always complicated, and moving's always complicated. There's always emotion behind it. There's always pragmatism behind it. The basic tenets of like selling and buying a home, nothing's changed.
No, it's really simple.
The environment is just a little different. Like the play calling's a little different this year than it was before, but like the same basic tenets of like why people move, how, it's just like, and we have every analyst and it feels like every podcast, every Facebook reel, everything was like, all right, we got to dive into the specifics and like the advanced characteristics about the home buying and selling market. And then you've got people that literally have no experience in this industry talking about market crashes to get clicks. It's amazing to me. Like, it's amazing to me too how like former people that were blasting the housing industry 2 months later are lockstep in about buying homes. I'll put Dave Ramsey, for example, Grant Cardone, all these people that like have all these followers, and Grant Cardone's got a company that he sells coaching to real estate agents now. 2 years ago, this guy was telling people how buying a home was the worst thing they can do for themselves.
Yes.
So it's just, but it's so funny to me how like we've based so much of this year and this market and the analysis paralysis on these people that frankly don't know what they're talking about.
Well, they do, but they know how to sell more.
They know how to, and it's based on whatever narrative they want or whatever conglomerate's paying them that day.
It's so attractive from Grant Cardone. Like, let's take that for example. What he's saying, or what he was saying back in the day, is that you might as well rent and pile the money of your equity in your house and actually put that to work, right? You might as well cash flow. But it's like, dude, like, you still need a place to live. So like, why wouldn't you lock into like equity?
Yeah. Just a heads up, that works really well if you have a few $100 million in the bank. Totally agree.
Unlimited.
Why?
funding.
Hey, why buy a plane ticket when you can just buy a plane? Great advice, Grant. It's just like when I listen to him say it, I'm like, yeah. I mean, You don't have to. I don't buy a house. I just rent this thing. It's like in Aspen. It's like a mountainside castle.
Well, he did just spend $40 million buying a beachside home.
And then you're just like, I can't believe this video has 17 million views on it.
It's fine. Like, that's fine. But like the people who didn't buy houses because of that and missed out on the appreciation of the last years, like that sucks.
It does. And again, it is an unpredictable thing. You know, I don't want to sit here and say, me and you don't sit here and go like, this is what's going to happen in the market next year. Guaranteed, 100%, this, that, whatever. But that's why we've always preached and coached people. We have to find the right motivation for buying.
Yep.
You're not buying a home to hit a specific equity goal. That is a bonus on top of the purchase, right? That is an added benefit. The utility of the home is the number one thing we talk about.
That's for like somebody who's going to live in a home. Like, you're absolutely right.
You know, and
a lot of utility.
Tons. You know, and if you were following along with these Thinking with Mikes before, like, I don't know if you guys know, I'm going to throw Mike under the bus here, but he was a big crypto guy there for a bit.
Oh my God, I was never a big crypto guy.
Oh man, you would come in every day and we'd be talking about. You did. Yes, you did.
No, so backstory.
Oh boy.
I'll mute you.
Here it comes. Hold on. Before you do that.
Oh God. So I had these so about 1 to 2 years ago, we started getting a lot of crypto millionaires and by a lot I mean 1 or 2, like crypto millionaires coming through and being like, hey, I got 10-12 million bucks in crypto, like how do I buy stuff with that? And so I got to the point where it's like, hey, I need to learn about this. Okay. And so I did get into it for a while, got my ass kicked in the short term.
But what I loved about it is you didn't, you know how some people get so into their thing.
Yep.
I think like Logan Paul or whichever one of the Paul brothers is like, this dude's lost people, millions of dollars, and he can't just come out and be like, hey guys, I'm a YouTuber. I don't actually know anything about crypto
and here's
or
the
the
deal.
economy.
So I've always said
But
this.
you were very like
I worked with
about that.
I worked with about 3% of my net worth.
Yeah.
Okay.
Yeah. It was never a lot.
And I was like, this is going to be fun. So if this all goes to zero, like whatever, I learned about it and it was fun. And I've always thought that was the way it was, but I was there. And so that 3% turned into definitely 1% after all said was done. But I learned about it. And if you want to deviate to crypto, I guess, my opinion on crypto is that it's a bunch of garbage and it's going to collapse. When you get too deep into it and you get people that are close, you constantly and consistently hear, you just don't understand it. You should do some research.
It's the cop out.
And I'm like, motherfucker, you're the one who's sitting here that's supposed to be explaining it to me.
Yeah, it was. I mean, it's always the cop out is like, well, you just don't understand it.
Yeah, exactly.
And then when I started hearing people talk about like the utility of crypto, I'm like, okay, do you actually know what utility means? It means you can physically utilize it for a service. And again, crypto technically has utility.
Yeah, but like a shitty one.
It's one utility.
Kind of a crappy.
And that's moving currency on the blockchain.
Oh, but it's expensive.
So, but what I'm alluding to and getting back to this whole thing is that like, you cannot debate the value of a house and a physical asset to live in or to have others live in, right? Like that is there. And like, even in the single worst meltdown since the Great Depression in our recent history of 08, 09, 10, it's amazing. Like, it didn't die and never come back. It died and it instantly came back. And instantly in terms of like, it took a couple of years, but like that's a fast turnaround for an asset class that absolutely tanked.
Well, so I was actually thinking about this morning. Okay, so the 08, 09 crash happened because all the inventory went to a few people, right?
Yep.
The big financial institutions put it on their books and they're like, oh shit, we're facing solvency issues. These houses need to be sold immediately, regardless of the damage and wreckage that they're going to do to the markets that they're in. Okay, so that's why we had this massive plummet, because all the banks put all of their houses on the market and reduced their prices super, super fast. Okay.
Yep.
So this idea that like we're similar to that, like, is kind of, it's ridiculous, because we're not having a zillion foreclosures where U.S. Bank is putting 50 houses on the market in your local market.
No.
and then driving the price to the ground. But with that in mind, I was like, oh my gosh, there's places across the country that have had swaths of the same company gobble up tons and tons of inventory. So if we have these big mega investment firms like BlackRock decide to liquidate in some of these communities, like that's actually a really dangerous spot right now because they could just pull the trigger and just liquidate those investments.
I mean, it could be, but I also think like
That's
with
scary.
the extreme shortage that's out there, you know what I mean?
Dude, at BlackRock, like in Arizona specifically, it was like every other house was sold to an investor. Like, dude, they have a lot of power to ruin those markets right now.
They could. I would have to bet that there's some form of like,
it'd be stupid because they'd be regulated after doing something like that.
Yeah. You're just clamoring for federal intervention at that point or statewide intervention. But I mean, I just love. I think that the moral of this story is the more we're in every day I'm in this market, I am more and more acutely aware of how overcomplicated we've made it. Not we, but like but we've made it. I mean, we got the 2-1 buy down now. We've got the 3-2-1 buy down now.
Explain what those are.
So like 2-1 buy down is not something that probably anyone on this podcast has heard of unless you're in this industry, but it's essentially like you will buy a home, say the market rate is 7%, okay? And year one, you have your rate bought down to 5%. Year two, your rate is bought down to 7% or 6%. And then year three, it goes back up to 7%. The seller's paying the hedge. So essentially the seller's paying for that buy down temporarily.
So like hypothetically, you buy a $300K house, you ask the sellers to pay a $10K credit. This is hypothetical. That $10K credit to the bank would make the interest rate lower on year 2 and 1 and 2. And then you would hit your actual interest rate on that third year. Now, what this is designed to get people through to a market where the rates are lower in the interim. Hopefully, they would refinance in those 2 years.
And what's crazy is like it's still a gamble.
Yeah,
right? It's the reverse gamble. Like you could take that 10,000 and just put it towards your closing costs. Take the 7% rate. We refinance in 2 years. You're better off that way.
Yeah,
you know what I mean. But you know we've again. Industry wide, and again, the 2-1 buy down is a great program. It's a great tool.
For the bank.
It is, and it's not bad for the buyers. I really don't think it is because I think you have
stay.
I mean, if rates stay or if rates go, because you get that principal back,
and you are qualifying off of that third year number.
Yep, you're qualifying off the third year number. It's not like we're qualifying you at the 5% to get you more home than you can afford. So. If anything, I think it's underwritten more strictly and stringently because it's a newer program. It's a more widely used program than we've had before. But like, we're just not digesting that. That's the same amount of risk as just buying at the 30-year rate, knowing that you're going to refinance in a year and a half, 2 years, 6 months, whatever the case may be. And the changes in this market are rapid. And that's where it's like, we're not necessarily encouraging people to buy your home now. But if you're thinking about it, and you're not having that conversation with your loan officer and your real estate agent right now, look what happened overnight. Rates dropped. I mean, I could foreseeably see by the end of this day that we are a full 3/8 to 0.5% lower than we closed out yesterday in a day.
And you wouldn't know about that if you're not already initiating the conversation.
And that's the thing is like, if you're sitting at home casually looking at Zillow, not engaged with a real estate agent, with a loan officer, like you're never going to know that.
We were talking about this yesterday. The people who are getting crushed right now are the ones who are trying to jam their move and their sale into a small period of time. So they see a house, they're like, hell yeah, I want that. And they go bam, bam, bam. And they lose the opportunity to, one, prep their property for the best case scenario. Excuse me. But you also lose your opportunity in that conversation with the loan officer that puts you in a position where you can actually plan and capture a good rate over a period of time.
And secret for everyone out there watching, that's like 95% of the market.
Yeah.
If you're willing to plan and be strategic about it, like you're in the minority and you set yourself up so much better. You're so much more educated about what's out there. You know, like you can see the actual truth about like, or actual spread of like rates and pricing and inventory. Like you feel that, you know what I mean?
Well, yeah. And we do this on Zoom.
That's why I joke that I took a year and a half to buy a home with Mike.
Yep.
Because I'm pragmatic, not because I'm picky.
We
Right?
fucking killed it on that, by the way.
Yeah.
Because of that plan. But these meetings used to be in person. Now we just Zoom them, right? It's 20 minutes. You get to know each other and you can plan it out. You can pull up this screen share and you just learn this stuff. So like do it from your living room when you get home from work. It's awesome.
It is. It really is. So, I mean, my big one takeaway, if you could take one thing away from it all, it's that as per anything, as per usual, as is the norm, the flashing headlines you're seeing are so detached from the reality of where we're sitting that, like, you know, it's kind of the whole concept of, like, if you look at the U.S. from a macro, and election season, perfect time for us to talk about this, is like how divided we are. I go out my front door to my neighbor. I don't give a rip and hoot who you voted for. I just know that Bill's a great guy.
Yes.
You know what I mean? It's just, and it's kind of that whole concept of like, this is a terrible time to buy a house.
Like you don't have to be
and
that
that's all you're
polarized.
seeing. No. And be open-minded to understanding and like knowing that. And I will say this. There is a difference between a real estate agent that has your best interest in mind and a loan officer that has your best interest in mind and ones that need to get a sale.
And you got to know, because the ones who need money bad right now.
They need money bad.
Like bad. They sold some houses in the up market and they got a taste of the big paycheck, and they've been blanking for the last 3-4 months, and they're staring at a wall going, holy shit, how am I going to feed my family?
And like, it's okay to have a real estate agent say, no, this is a bad idea.
Yes.
I respect that more than anything, is when I see agents telling clients, and don't get me wrong, like working a full Saturday and running numbers and this, that, whenever, and this one looks really good, but it's like, guys, this is not a good buy for you. I love hearing that, because it's like, okay, this person knows, like, these guys are ready to pull the trigger, and he's saying no, or she's saying no, this is not the right house for you.
You looked at a house with me. I actually like, and I can see it in my consumers, because like when we roll up to houses, I punch holes in all of their balloons before we walk through the door, and it's it's good, but like I want them to know about what we're talking about. So the first thing, like where a house is, for example, like we're on a busy road, if there's something obstructing that the other buyers are annoyed with, like they know about it. And I tell them, I say no more than I say like this is a great opportunity.
Yeah. So I mean, transparency, having people that aren't afraid to just tell you how this market really is. Crap, that's so valuable.
Being able to say like this is probably not a good idea to buy right now.
Really hard to find. How do you discern that? You know, but you have to find a way.
Anyways, yeah.
So it's important.
What you can anchor this in is like not every market is for everybody, right? Even the last 2 years, like people who are in good houses, like when the housing market was rocketing, like a lot of people were like, I'm fine in this house. I don't want to deal with the hustle and bustle. It's like, that's the same excuse like that we're dealing with right now. Like it's a hustle and bustle. So like if your motivation makes sense in the marketplace, like I need to move, I have an empty house, I'm relocating, I need to downsize, I've got a renter in this property, I don't want to hold it anymore, I'd like to capture the equity while it's still there. I want to buy a house for the first time, right? These are all really great motivations in today's marketplace, right? I'm in a perfectly decent house right now that matches the needs of my family, but I kind of want something better. That may not be the proper motivation for this right now. You may be okay just being cool.
Yep.
So it's not for everybody, but there are motivations that are out there. And I want to encourage you guys, if you are one of those motivated people and you're planning on moving in the next 10 days or 100 days, like get connected with us. Look below. There's a link. You can see my schedule and schedule a Zoom meeting with me. I'd love to chat with you on the computer. Let's just talk about it. Same with Ken. Like his information's down below. Call him up. He's great on the phone. He works way too often, nights and weekends, but he's there for you.
And bonus, a bonus that Michael was not prepped for is that if you meet with us in person here, we will let you play with the soundboard. So much fun.
Oh God, got both at the same time. You can come touch it, I guess. I don't care.
All right, guys, it was so great spending some time with you today, and hopefully you got some nuggets out of it. The next one is going to be exclusively us burning Michael about crypto. I'll be leading that conversation, and I'll put all my data points together, and we'll just talk about how dumb Mike is.
Honestly, I would be interested in going through my journey, and I'll just lay it out. I don't care.
It's actually a really cool story, and the day, like, I do wish I had a camera in there.
I think people need to understand like what it's like and like what I learned and why I'm like, holy crap, like don't touch that with a 10-foot pole, because I put my real money in there.
Yeah.
Put it to work, researched it, found all the what I think were the best options for projects at the time, and still left going like, oh my God, like this is not good.
And to be completely blunt, the only reason I didn't get into it is I didn't understand it. The more I dug into it, the less I understood it.
Well,
the more I dove into it, the more confused I got.
I'd be happy to talk to you about it, but it's gonna be negative. It's gonna, and those of you that have your money with crypto, like get the fuck out.
But it's fun. It's a fun conversation, and it's a polarizing topic because there's some people that still believe in it. I would love to. I want to do.
Go
that.
for it. Stay in crypto, but for God's sakes, if it's more than 5% of your net worth, get the hell out. Do not hurt your family over this. It's still speculation, you guys. It's built on a bull market. The last time that Bitcoin, oh my God, I'm tangenting.
You're tangenting, and you're not a financial advisor. You can't give people financial advice.
I'm not a financial advisor, not financial advice, just my opinion.
Thanks for the disclaimer. All right, guys, we'll see you next time.
Bye-bye.